Trump's One Big Beautiful Bill Act was officially passed on July 4th, 2025, marking a major overhaul of the U.S. tax code that will affect millions of Americans. While the bill is widely known by this catchy name, its official short title was removed during the Senate amendment process, so legally, it has no short title. For simplicity throughout this video, we'll continue referring to it as OBA. OBA is largely seen as an extension of the Tax Cuts and Jobs Act of 2017, which was originally set to expire at the end of 2025. The new law not only extends key elements of the 2017 Act, but also makes some provisions permanent and introduces sweeping changes to others. Its primary goals are to lower tax rates, expand deductions, and offer new incentives to help taxpayers reduce their overall liability. Despite its passage, there's still a lot of confusion about what exactly has changed and how it will affect individuals and families. In this video, I'll walk you through a high-level overview of OBA's major provisions, sharing insights from my perspective as a financial advisor. If you have further questions, feel free to reach out directly. Let's dive in. Let's start by looking at several of the key policy areas OBA touches. I'll walk you through each one so you can see exactly where the biggest changes are happening and how they might affect you. 1. Tax policy and economic provisions. 2. Energy and environmental policy. 3. Defense and immigration. And finally, 4. Education and family policy. And of course, there's also the fiscal impact and public sentiment to consider. Before we go any further, please note that the purpose of this video is to share a high-level overview of some of the items included in OBA, not present an exhaustive list that should be relied upon when making tax, investment, or other financial decisions. As always, you should consult with a licensed professional before making any decisions related to your financial situation. With that in mind, let's take a look at some of the changes to key policy areas. Tax policy and economic provisions. So first, permanent decrease for individual tax rates. The individual tax brackets established under the 2017 Tax Cuts and Jobs Act are made permanent under the new legislation. Previously set to expire, this is considered a permanent decrease in rates. It is also projected to be one of the costliest elements of the bill, with estimates suggesting it could reduce federal tax revenues by approximately $2 trillion over the next decade. Permanent increase to the standard deduction. For single taxpayers and married individuals filing separately for the tax year 2025, the standard deduction rises to $15,000, an increase of $400 from last year. For married couples, it goes to $30,000, an increase of $800 from last year. A large majority of taxpayers actually utilize the standard deduction, so this will affect a broad segment of the population. No tax on tips. This is a tax deduction and not an elimination. It's important to understand that tips are not entirely tax-free. You can deduct up to $25,000 per year in qualifying tips. This amount is reduced by $100 for every $1,000 your adjusted gross income exceeds $150,000 for single filers or $300,000 for joint. No tax on overtime. The bill creates an opportunity for eligible workers to subtract a portion of their overtime earnings from their taxable income when filing their federal taxes. However, it does not make overtime entirely tax-free, as federal payroll taxes and state and local taxes will still apply. The deduction is capped at $12,500 per individual, $25,000 for joint filers, and phases out for high earners. Bonus depreciation. This provision allows businesses to immediately deduct the full cost of eligible assets placed in service within a date range. This change is particularly beneficial for industries with substantial capital investments, such as oil and gas, real estate, and manufacturing. For real estate investors, especially those involved in short-term rentals or commercial properties, combining 100% bonus depreciation with cost segregation studies can accelerate depreciation deductions. Therefore, consulting with a tax professional is advisable to navigate the complexities and maximize the benefits of this provision specifically. SALT deduction cap increase. The state and local tax, or SALT as it's commonly referred to, deduction cap has been raised from $10,000 to $40,000 for households earning under $500,000 a year, with phase-outs beginning at $500,000. Also, the child tax credit enhancement is part of the bill. The child tax credit is raised from $2,000 to $2,500 per child through 2028. Qualified small business stock, QSBS expansion. The gross asset limit for QSBS eligibility increases from $50 million to $75 million, and the tax-free profit cap increases as well. Let's talk about energy and environmental policy changes. First, fossil fuel incentives. The legislation mandates new oil and gas lease sales on federal lands and offshore areas, reinstates full deductions for intangible drilling costs, and delays the methane emissions fee until 2035. Coal industry support. At least 4 million additional acres of federal land are made available for coal mining, and royalties for coal companies are reduced. Clean energy rollbacks. The bill repeals several clean energy tax credits and reduces federal support for renewable energy initiatives. A tax deduction on Made in America auto loan interest. Taxpayers may be eligible to deduct up to $10,000 per year in interest paid on loans used to purchase certain vehicles. The vehicle must be new and utilized for your personal use, not for business or commercial purposes. The deduction begins to phase out for individuals with modified adjusted gross income exceeding $100,000. Next, let's talk about the impacts on defense and immigration. There's an increase in defense spending. An additional $157 billion is allocated for military spending, including funding for the Artemis program and support for the International Space Station. Border security funding. Over $150 billion is designated for immigration enforcement and border security measures. Finally, let's talk about education and family policy changes. The main one is what's called the Trump account for newborns. You may have heard of this one. A new $1,000 government-funded investment account is established for children born between 2025 and 2028. The accounts will track a stock index and allow for additional private contributions of up to $5,000 per year until the individual reaches the age of 18. At that point, there are limitations or guardrails around future withdrawals from these accounts. Earnings in the account grow tax-free, similar to a Roth IRA or a 529 plan. Withdrawals are tax-exempt if used for qualified expenses. The exact criteria is pending final IRS guidance. Unauthorized withdrawals could face penalties and/or taxes. Let's talk about the fiscal impact, specifically the deficit impact. The Congressional Budget Office projects that the bill will add approximately $3.4 trillion to the federal deficit over the next decade. The public sentiment is also important to consider. There's advocates of the bill that argue that these tax cuts and business-friendly measures will create a net positive by spurring robust future growth, increase tax revenues, and spur GDP expansion. Opponents, on the other hand, worry that this bill will add to an already growing national debt and that the cost will not be recovered by any future growth or tax revenues. In conclusion, while OBA introduces sweeping tax reforms and economic incentives aimed at growth and individual relief, its long-term impact will depend heavily on how these changes play out across fiscal policy, public services, and the broader economy. Once again, be sure to consult with your tax advisor and financial advisor before pursuing any strategy that could affect your tax or financial situation. Don't forget to like and subscribe for more content like this. Follow Tidecrest Wealth Management on Instagram, connect with us on LinkedIn, and don't forget to check out our new podcast, Tidecrest Perspectives, now streaming on Spotify. Thanks for tuning in. See you next time.